Good day, traders. In the next 10 minutes, I want to show you how I took a short trade on gold from more or less this area down to a 3 or 4 risk R&R for risk to reward. So let's jump right into it. So just to get some clarity, the charts might look a little bit different than what you're used to seeing on this channel. The past few months, I've been studying and looking at the content of Stacey Burke. If you don't know who that is, search him on YouTube. He has hundreds of videos. So I've been digesting some of his stuff, and everything that I've been going to talk about today is basically based on what he teaches. So the main core concept we'll be looking at is 3 levels of rise, and I'll show you that in just a bit. So just let's have a look at just before New York session. So we created, there was our new day, began right over there, and then we created a low of the day. So this is currently the lowest low of the day. Low of day, just put that in right there. Now the idea is to look for 3 levels of rise from the low of day. So just to clarify, I might be getting some things wrong. This is just my understanding currently on this topic. So 3 levels of rise in the form of 25, 50 or 100 pip boxes. Now that is what these lines are for on the right hand side. So you'll see that we have these levels. They are increments of 25 pips or points. You can see that 25, 50, 75, 100 right over there. So they are increments of 25, 50 and 100. So now we're looking from the low of day, where could price potentially give us a trade setup for New York session. If we quickly measure out 25, there's 25 pips, and then we duplicate that, so there's another 25 and another 25. Now what can you notice all this? There's nothing. Well, we have this order block right over there, which could potentially be a zone or something, but also note that this leg down didn't break any structure, so this doesn't really give us a valid zone to take a sell off from. So it's not really a valuable option. Where do we have internal range liquidity? We have buy side liquidity above the high, buy side liquidity, and it's also in line with the previous daily high. So that gives us an added confluence of where we have liquidity. So we have resting liquidity above liquidity. We have resting liquidity above this high. It's also a previous New York session high, which gives it added confluence. So now if we look at 25 pip boxes, let's just quickly make this a little bit bigger. We have 50 pips, another 50 pips, and then another 50 pips. So potentially we could see price from this low. We have 3 levels of rise, 50, 100, 150 pips. The price could potentially trade up into this area, and then we could look potentially for a short. The next thing we need to add is the element of time. We're looking at that first hour of, more or less that first hour of the session, which is in my time 2 o'clock to 3 o'clock. So let's then see how price played out. So we had price trading, and then all of a sudden, just before the session, we start seeing this pump towards the upside. We cleared the buy side liquidity, we traded into the buy side liquidity, and then I think we had one more push going a little bit up, going higher, something like that. Okay, so now let's have a look quickly at the lower time frames. Once price has now reached this area, we're inside that area. That's then where we can start looking for potential trade opportunities. We can identify that we have a, well, actually we have an order block, the big one over there, these buy candles that took out the buy side liquidity. So we're still looking for our lower time frame patterns. We have a structure break going lower, So I want to enter anywhere in this area potentially and have my stop loss above the wick, and then I'm targeting the lows. So that's more or less the idea. I only traded it down until this area. I think that was my objective. But you can see that we could potentially trade it down to this high low that was formed just outside of New York session. But we're just going to keep it clean and clear. 3.3 risk reward. So the idea is then to find a trade as price retraces into this area and then take a sell going lower. Let's just have a look what happened there. Perfect. So this is not hindsight. If it has already popped up, I'll show the trade as it happened. But that was the thesis and the trade breakdown on why I took a short trade on gold today. Now, looking at this, a few things to pay note of to add to your checklist is, where is the current high or low of the day? We have a low of the day and we have a high of the day before London starts. London makes a new high of the day. That becomes the highest high of the day right over there, and we create a low. This low does not go below this low, so this is still the low of the day. We then continuously seek the high of the day, make a new high of the day, a new high of the day, ultimately creating a high of the day right there at the top point. And then we now took out buy side liquidity, previous day high, previous session high, and set in a new high of the day. There's no reason for price to continue further up, and we see the run towards the downside, seeking the sell side liquidity left behind lows on its way towards the upside. Everyone that started buying right over here, stop losses below this low, they are then tagged out of the trade. I hope that makes sense. So it's a quick simple breakdown, but the principles runs very deep. So it's not my concept to teach. I just share with you the trade I've taken based on 3 levels of rise concept taught by Stacey Burke. Guys, that's it from this video. Hope you have a wonderful day. Check you in the next one. Bye.